Welcome back to the Property Frontline for another episode of our very popular Market Watch series. I'm joined again by the fabulous Scott Hoaxang. Hi, Scott.
Hello, everyone.
So today we are here to talk about property market performance to the 31st of July 2026. As we always do, we cover off the data from the three most reliable data centres. And we always cover an in-focus session for each episode. And today's in-focus session is Region Watch, where we'll be shining a light on what's actually happening in the regions. So let's kick that off. So now the big episode 31. So the data sources that we use are Cotality, PropTrack, and SQM Research. So Scott, can you take us through the data for to the 31st of July 2026?
Thank you, Deborah. And I appear to be staring at a river of red for my lines here. So we'll start with Sydney, down a whopping 1.7% in July, the Cotality stat there. PropTrack's was less, down 0.7%, and SQM's asking price data down 1%. So we're seeing a pretty hearty fall, I think, across the board there in the Sydney stats. Popping down to Melbourne, another large fall, 1.4%. Cotality has. PropTrack not as great a fall, 0.5%, and SQM's about the same, down 1.1%. Shifting down to Brisbane, bit of a change for those of you that have followed us last couple of months because we haven't had a line of red for Brisbane yet. I think this is the first time. So down across the board, 0.6%. Cotality stats. PropTrack's is a minor fall of 0.3%. SQM's is deeper at minus 1%. And down to Adelaide, just a small bump down in those Cotality stats, 0.2%, 0.6% down, PropTrack, and a very hefty 2.5% fall. Louis reporting at SQM. We'll have to just watch that one in case that is an outlier. Something's happened there. So four rivers of red for my four. I'm going to shift over to Deborah and let's hear about Perth and our other capital cities.
Okay, thanks, Scott. Yes, and of course, the point to make about the data that we're looking at right now is truly a reflection of the property market performance after the 12th of May. So data that we looked at last month did have early May results. So we're really now looking at everything that has occurred since the federal government made their announcement about the changes that they're rolling out for property legislation. So looking at Perth, Cotality still has Perth trending up by 0.1%, PropTrack going down by 0.1%, and SQM asking prices down by 1.2%. Hobart still up by Cotality by 0.2%. PropTrack down, that's a big change, by 0.7% from, PropTrack. And then SQM has asking prices trending down by 1.4%. Darwin, Cotality still has that up as the major performer at 0.7%. And then PropTrack still up by 0.1% and SQM down by a full percent. Then Canberra, Cotality has that trending down by 1.2%, PropTrack down by 0.6%, and SQM has this as the biggest drop at 2.7%. Right. So what else have we got for you? So let's look at the graph because I need color and movement. I'm not really keen on the numbers, but So with this graph, we can really see the 8 major capitals all in a downward trend. So we can see Melbourne here. The next one is Sydney. Then the next one down is Canberra. Next on the list is Hobart. You can see it starting to trend down, though it looks a little bit flat. Adelaide, and then the next one is Brisbane, Darwin, and then Perth. So, Scott, anything else you would like to say about this graph?
I think just noting the sharp rates of decline in Perth and Brisbane. I mean, those curves have really turned. It's like a bit of a roller coaster ride. These are rates of growth. The markets themselves
Percentage
are
rates.
generally not falling, but the 12-month growth rate is falling now a lot as we pick up those 2 months of data from the budget.
Yeah, and it is just houses, not units as well, because units really haven't done much. Yeah, okay. Right. So, Scott, can you take us through this slide?
Sure. We've got some long-term price growth data for the capital cities. These are dwelling prices on the left. I just wanted to give you a sense that top line is the Sydney market. You know, we've had a long-term growth trend going back to 2015, but as you will note, it hasn't been a straight line. There have been multiple dips along the way. Quite a sizable drop back in 2022 around that COVID timeframe that we all recall.
Too well.
Sort of very similar across many of the markets. So this fall that we're looking at in the last couple of months is a very small amount compared to the growth that's occurred even in the past 2 to 3 years. So if we go over to the right, this is a cut at the data just showing where we're at in that Cotality indice data that they publish versus their peak. So Sydney and Melbourne are both off a little less than 6% from their peak pricing. Brisbane just 1% off peak, and Adelaide and Perth even less than that. So the beginning of a downturn, relatively big picture historically. This is coming after quite a long period of growth in these markets.
Yeah, right. And also a little bit of an overview.
So this shows how fast the decline is. This is national house prices, again from Cotality. That dark line is the 2026 drop. So this is the drop in the markets by months across the bottom. So we can look at 7 of the 8 previous declines, and message here is that this decline, at least at the moment, is just an average one. So we've had others that have fallen much faster in the short period of time, others that have fallen not so fast. Are we accelerating in this decline is maybe one question I have. We will see what this looks like in the next month or two. The people in the media are hyping that this is quite a deep decline relative to history, but we'd like to go back to the data and just back everything up and see what that says.
And this also sort of makes a mockery out of those people who are saying, it's the end of the 30-year power cycle. Like you can see, there's been quite a few corrections, relaxations, whatever you want to call it, over the last 30 years, 40 years. But I guess it's another example of how some commentators are really amping up or, dampening down what's actually happening. And of course, we're all individually impacted, so we all have our own views. But
When you read those media headlines, go back to the numbers and the stats. Just double check it for yourself.
Yeah, that's right. And of course, nothing's ever locked in unless you have purchased or bought during that time.
Exactly. Tell us about this one, Debra. Market segments.
So, we'll hear a lot about the top line numbers, but what we always say is there is really 3 main markets at the moment. So currently I would put one market in that around the 1 million, depending on which state you're in, 1 million or just over it. And those markets are still holding up quite well. Then you've got your middle market, which is like I'd say 1.5 to 2.5. That's middle, and then anything above the 2.5. So this sort of gives us a little bit more of a granular view. And this is actually, I would say, the first month where we've seen the lower end of the market. So where it says 25th percentile, that's my sub 1 million. So Sydney is really starting to slow down in that kind of market, and also Melbourne. But it'll be interesting to see what happens, because that sub 1 market really has got a huge buyer pool. And I would say this is yet again a reflection of that 12th of May situation where people went, oh, wait a minute. So I don't know, this is actually a trend or a reaction. But anyway, so then Brisbane, so we can still see Brisbane rising at that lower end of the market, really still performing across the board. Adelaide, similar. Perth, still a very strong low end of the market. Hobart, the same. Darwin, I've poured cold water on it for about 18 months now. I'd still back it all the way, even though there's been some short-term bursts. But and then of course the ACT. Is there anything that you would say about this, Scott, that I haven't mentioned?
I think just that first home buyers are probably doing a bit better in Sydney and Melbourne, reading into the data, and they are running into still a lot of investor competition in Brisbane, Adelaide, and Perth. So many people all going into battle in that lower price segment over not enough properties to buy. We also had the extra effect of the self-managed super fund ban kicking in on borrowing, and that's pushed a bunch of buyers into that affordable segment as well.
Yeah, it really did. And thank you for mentioning it, because we really did see that surge, and a lot of the agents were commenting on it. So, there was, I guess we should explain it now. So the government changed the legislation and announced it very, very quickly without much notice, saying that people who had a self-managed super fund could no longer use borrowings to purchase a residential property. And so there was people who were like on the runway to actually do that, because it takes quite a bit of time to get all of that, up and running. And so they had to truncate their activity, and the deadline was the 10th of August to have contracts exchanged. So, we would see a little bit of a bump. It's not a huge part of the market, but it certainly did crunch up activity that would normally be spread over the year. Thanks again, federal legislation changes.
Yeah. I like that runway analogy, by the way. I'm just envisioning people piling onto a plane up in Brisbane, and the Sydney airport closes, every night at a certain time. So if your initial departure plane is late, they have to make up the time and fly like mad. So just imagine some of these people, one, trying to set up their self-managed super funds at the very last minute, or second, the ones that are all set up, ready to go, just out desperately looking at a property to get under contract by that time frame.
Yeah.
And if you miss the curfew, well, we know what happens there. So
yeah, that's right. It's bad. Okay, so we've talked about all of the impacts on prices, or all of the performance on prices, but what's going to happen in the future? So different pockets of the market have bigger or less confident buyer activity, but the other impact that we need to keep our eye on is listings or the supply of properties available for purchase. And what we know, though I don't have the slide in here, is that listings are starting to slow, but we can see that overall listings, so there's some properties that have stayed on the market a little bit longer, and they're combining with new listings to raise the supply level. And so you can see here, this purple line is where we are right now. And then the dotted line is the 5-year average. And for so long, it's been painful as a buyer, because, we have lagged so much behind that 5-year average. But now we're starting to see that sort of bubble up, and we would normally see a good supply of property coming onto the market in spring. So let's see what happens. But so if there's a little bit more supply, of course, prices are going to be softening a bit. And so we need to be, mindful of that. So all that talk about listings, what we also hear in the media is they'll quote the auction clearance rates as an indicator of what's happening in the market. And we're actually starting to see that auction rate not necessarily be a really good indicator. Of course, we still need to use it, but if you look at this data, so this is from SQM, and this is the cleaned up auction data. So often we'll see an initial clearance rate that's published over the weekend, but then that's normally inflated a little bit. But this is like the landed reported data. And I just draw your attention to a couple of things here. So Sydney and Melbourne, really, they're the ones that have the most active auction market. The other states really don't use auctions as much. But this last weekend, we've seen it really almost starting to bounce. So clearance rates are improving, but the number of auctions is decreasing. So you can see Sydney, there was 569 auctions scheduled. So in a bumper weekend, we might see about 1,200. I've actually seen 1,500 auctions listed over a weekend. And then, 569 scheduled, but only 102 sold at auction. Then in Melbourne, the clearance rate has gone up to 46%. But yet again, still only 730 properties were scheduled for auction, and only a quarter of those actually sold at auction. So it's tricky, those numbers, but the interesting thing is that we have got data that SQM published. So when we look at previous last 3 months performance, you can see the auction clearance rate is pretty flat in Sydney. So, closer to 30, but the number of auctions listed is dropping. And similarly for Melbourne, so you can see pretty flat clearance rate, but like last weekend, the clearance rate was 46%, but the number of auctions, number of properties going to auction is less. So
you would think they'd be going up as well, wouldn't you, Deborah? Because as we're starting to get into a bit of winter's almost over, into some better weather. I would
say we're still in that winter market.
Yeah.
So over the next couple of weeks, like we're entering spring, and so the number of properties listed for auction should increase. But, that's the conversation. Are we saying that auctions are a little bit irrelevant or becoming irrelevant as an indicator of what the market is doing in a softening market?
Are auctions becoming less relevant to the market stats, or is this a temporary maybe blip where people are sort of still in shock from the budget? And we will have a lot of people that maybe need to sell getting closer to the end of the year, and we'll see a big bump up. I mean, I don't know.
Mm. And it's about the tactics that agents recommend that their vendors use. So we do like auctions for a deadline, but I don't know that it's really motivating buyers as well as it used to.
No.
Okay, all right. So on to rents.
So shifting over to the rental market, we always touch on this each month. We've got annual change in house rents from Cotality on the left. Boy, look at these spiking rents.
Yeah.
We've had Darwin and Hobart both jumping up for some time. There are obviously short-term rental shortages there. Darwin's rents up 11% and Hobart 8%. The shocking number I found last time, it still is very high. Perth's still up at 8%. That's coming after just some enormous increases in rents out there over the past 2 to 3 years.
Yeah.
Then, still well above inflation. We've got Brisbane at 6.7 and Sydney at 6.1. Adelaide's a bit slower. Melbourne down at the bottom, 5.2. So all these markets have rents that are growing above the inflation rate. And for those of us who follow those macroeconomic numbers like that, they feed into the inflation rate. And it's, with rents running at these levels, it's hard to imagine we're going to be able to get inflation back down to that trend line.
Yeah.
We have put in here just a snapshot of the latest month. These are rents as published from SQM. Again, the yearly stats on the right pretty well match Cotality. We've got green strongly up across the board. Sydney, up 6, Melbourne up 6, going all the way down the line. But I just wanted to put this in there. There are a few little tidbits in here. Not all house market rents are going up. It's not that explainable at the moment, but we're showing Sydney house rents actually went down 1.5% in that month. Now that could be due to seasonality and maybe fewer people moving around in the middle of winter, and that growth spike may still be coming. But we had a few other markets as well. Adelaide and Canberra showing declining house rents. There's enough markets that were declining that when you average it together and you go down to the capital city average, rents were flat across all capital cities, so it's sort of two messages here. We really are going to just have to see what happens in the next couple of months. People's leases are coming up. Lots of anecdotes out there about rents being put up by landlords in response to higher costs, or for some of them, a bit of a reaction to the budget.
Well, and it's also a supply issue, and we're just going to see that, get worse and worse, which makes it bad for tenants, because there'll be less opportunities for properties available to rent, and we'll see that.
For current owners, I mean, that's slight positive, I guess you would say, because it's easier to hold your properties as rents are rising. So it's, again, not the best news for tenants out there, but for the people that have been investing, bit of positivity there.
Yeah, exactly. Right. Okay, so on to market factors. So in this segment, what we do is cover off the main issues that have occurred over the last couple of weeks that are going to impact prices or behavior over the next couple of weeks. So the first one was earlier this week, the RBA, as expected, held rates at the 4.35%. The next meeting will be on the 29th of September. Big changes occurred in Victoria with the Labor leader changed, but of course they've got an election in November, just a couple of months away. So it is looking like Labor might be challenged and might not be returned to office. So the question might be, will it be One Nation or the Libs? I know who I would prefer, but we're not voting at the moment. Also, over the last couple of weeks, we had the Labor Force announcements, and Victoria is leading in the unemployment race. So they were the highest in unemployment at 5.10%, so not great for them. Market, as we've talked about all through this episode, the market is softening at a headline level, so you have to look a little bit deeper to get what's really happening. Now, there is constant legislative tweaking plus incredible mistakes that are coming out now of what actually happened during that budget announcement by the government. The first one I want to point out is that there was an example given for everyone. It's a little bit complex, but examples given for all the tax agents to use when you're working out capital gains tax. So the government gave examples of the scenario, and they made glaring mistakes to the tune of the end result was they thought someone was going to be better off by 131,000 by the changes that they'd made, and they made this mistake, and so the person will now only be about 32,000 better off. I mean, just really cartoon stuff. The other thing that's driving me mad is they're constantly tweaking at the legislation. And I know I'm going on a bit of a rant here, but if you're a buyer and you don't want to break the rules, you've got to have clear rules clear guardrails to make your decisions. So the last one that we heard about that you pointed out to me, Scott, was that the government said only people who buy new property would be able to still get the previous treatment of negative gearing and the old way to work out capital gains tax. But now they're saying, instead of it being clear cut, you are the first person to own this property, then it's new. Now they're saying if you buy it, within 2 years of the issuing of the occupation certificate, then it's still considered new. Do you have an opinion on this?
I mean, certainly there's some inconsistency there. I mean, from what I understand, it's been done more for the builders who are building spec homes, and they want to give those people enough time to sell their houses. But the unintended consequences are it sends very confusing message to the market. And as Deborah's pointed out, you might have somebody who's bought that house. Maybe they've made a mistake, circumstance, something's changed, and they relist it for sale. And the next person can treat it as a new property, even if that first person had rented it out or lived in it. So, yeah.
Well, you could have multiple buyers. Multiple
Well,
buyers
we
and
could
sellers.
have 2 or 3 flips in a short period of time. Look, I will mention one other thing. There's still some movement going on with the divorce and death issue regarding negative gearing and capital gains tax. Look, I thought there was kind of plenty of time to kind of fix this up and get it all together, but it has been pointed out to me that when there is a major life change like that and one spouse needs to take the property, okay, it's one thing to transfer the title over, but sometimes that person needs to get finance to take the property over. And the banks are factoring in negative gearing, so they really need clarity on that very quickly.
Well, and also the valuations. So the valuers, the bank valuers, are really like driving the valuation of properties for refinance, or when you buy, like you have to get a bank valuation when you purchase. And in a normal market, they will just sign off if you've paid market rate. But now they're like undercutting people like crazy. It's disgusting.
Well, I think there'll be more of that in falling market. You're going to see the valuers get even more conservative and, have properties start missing their They're numbers.
Well, more on that at a different time. All right. Now, the other point, there will be dramatic impacts on supply because of that issue that we were just talking about earlier, where now if you're buying in an SMSF property, you cannot use lending to borrow to buy residential property. And of course, SMSF property was 100%, or residential property was 100% there for tenants. And so the HIA, so the Housing Industry Association, that's all the builders, they're expecting around about 70% of their contracts to not progress because people didn't make the deadline, whatever. And what do you think that's going to do to supply over the next 12 months, 24 months? It's bad.
It certainly goes against, the message of us wanting to increase supply, and help with the rental crisis.
Yeah, it really does. You sound very measured. I'm getting a little bit hot under the collar. All right. So other trends. So mortgage choice, recently, they did their end of season reporting, and during that shareholders meeting, they mentioned that they saw an increase in loan requests. Of course, other banks are reporting they've seen drops. I think it was ANZ said earlier today that they had experienced a 12% drop in loan requests. And then the final point, yes, the Middle East conflict, which used to be right at the top of our market factors, now right at the bottom.
It's been dragging on for so long, and there have been so many ups and downs. We need some help on inflation. They need to get things sorted there so the global oil price can come down. I guess the only good news there is it seems like oil prices are not affecting inflation rates as much as what they used to. Certainly in the US, a very positive inflation reports just come out there. Very low inflation for the month, which maybe is a sign of some things to come here.
Yeah.
So we'll have to just see how that goes. They've also put we got rid of our petrol little tax cut we had from Jimmy and Albo. So everybody's seen petrol bounce up. Well, that flows right into our inflation stats here. So we're not out of the woods yet on whether rates are at a peak or not. And I don't think anybody can give a definitive answer on that.
No. Okay, so now we're into our In Focus segment, and this month we're focusing on the region. So what is happening there? So first up, a definition. What is a regional area? So from our perspective and the ABS definition, so Australian Bureau of Stats, basically it's anything that isn't a capital city. Usually in a region, the population will be between 30,000 to around about 200,000 people. We are not talking about remote regions. We're talking more about that mid-tier kind of region definition. So how do you select the best options? We'll get into more detail shortly, but I just want to make a few points. So always beware of the pulse with a region. There's a smaller market, and so just a couple of extra purchases or a couple of, more expensive purchases can cause like a data blip. And so you want to be careful of the trends. There is expansion of existing cities. So what we will often see is a satellite be considered to be a region, and then it is gradually enclosed into a capital city. For example, the Gold Coast could kind of technically be called Brisbane, but don't say that to anybody on the Gold Coast. And of course, we have a little bit of a trend starting to occur where we've got new cities coming on board. Right. So from a trend perspective, There have been, of course, some ups and downs, but we can really start to see that the trend is on, with people moving from the more expensive cities going into the different regions, and the regions where you'd say the most activity are Sunshine Coast, Greater Geelong, the Fraser Coast. So we're talking kind of Bundaberg, Rockhampton, Yeppoon, that sort of area. Pardon?
Hervey Bay.
And Hervey Bay, yes. And there's Moorabool in Victoria and Lake Macquarie. So those are the greatest performers in the last 12 months to March 2026. And of course, we've got the census data coming on soon, so that'll be interesting.
Yes.
Okay, Scott, talk us through the property performance numbers.
So we've got growth prices here from Cotality across the different regions. We just wanted to look at the 5-year growth rates here just to understand what has been happening out there. So regional New South Wales markets up 28% over the last 5 years, just compared to Sydney, which is only up 9%. Sort of going down the list, regional Victoria has not had a lot of growth to date, but then we've really had the high growth markets where we've had, Brisbane, Perth, and Adelaide all showing a lot of growth in the last 5 years. And we see the same thing out in those regional markets. Almost a doubling in those WA regions in the past 5 years, and that's even faster than Perth. I guess signs are, strong growth. We've had growth out for various reasons. We'll get into those as we kind of move here, but the historical track record has been strong. You certainly shouldn't be disregarding the regions in your property search, just looking at these numbers.
Yeah. All right. So doing a deeper dive in the East Coast regions.
So this is the top 10 regions in Queensland from Cotality. They simply are pulling and making a list based on who's had the highest growth in the past 12 months. Many small sub 400K markets show up here. So there are bursts of growth in quite small markets. Ones people will recognize, Toowoomba, obviously quite recognizable to people. Maryborough is up near Hervey Bay. Chartered Towers up north of Townsville, very small market. And I know Nambour quite well on the Sunshine Coast. That's really one of the cheapest pockets on the Sunshine Coast. And look at the number on that, over $1 million. What do you think of this list, Deborah? Any standing out to you or much interest?
I would not buy in any of those locations, none. So I guess it's just one of those, like another example of the fact that you just can't buy just on those price changes. And we'll talk about the reasons that would make us buy in a region. But yeah, I think those areas are.
I would say probably not long-term growth markets or suffering from, different factors we would be looking for. There's much better options out there.
Yeah. Okay. Values in New South Wales?
Similar list here. See, Enverall on the list, Deborah. It's one that Deborah actually picked on one of our podcasts about a year ago or so. Nice job on that one. Tamworth still on the list. That market's getting more expensive. We were doing some stuff up there about 18 months ago, but really not spending much time there. Hunter Valley's been a good, solid performer. Albury and Wodonga, I think a lot of people have been looking there. So there's kind of a few that maybe we would spend a little bit of time on here, but again, it feels a bit like a second tier list, to me. Deborah?
It's patchy. And yeah, because, we're looking for locations that are great long-term holds or where people can add value, where there's a lot of other indicators for reasons to buy. And yeah, so some of those places I would have on my list, but not all. Right, let's look at Victoria.
And Victoria, again, we'll pick a couple of names that we obviously know and recognize. The regional centers, Bendigo and Ballarat are kind of traditional ones that have done pretty well in the past 12 months, especially compared to Melbourne, which has been going backwards. And again, we see Wodonga on the list. And then some smaller, very kind of cheap markets, those $4,000 type markets, which typically are quite rural in smaller towns. I would say on this list, we'll get into areas where we're looking at, but regional centers closer to Melbourne are certainly worth a look if you're on a budget and looking for affordable properties. We probably would be looking in Melbourne for those people for new builds, but going out to the Ballarats of the world, they are showing good growth. There's a lot of investor activity out there and quite a lot of growth drivers in place.
Mm. Yeah.
I don't think you're really that big on Victoria these days, are you, Deborah?
No. I haven't been a buyer we buy in Victoria, but for different reasons. But I wouldn't recommend it as as the saying goes, there's better places to buy. But if I was forced to buy in Victoria or choose a location because of the buyer's preferences, I would really just try, once again, hug the coast, like we always say, and stay as close as you can to the major capital. Yeah, that's what I would do. Yeah. All right. So just a really high overview of what we would both do when we're choosing regions. So we've talked about how there's some locations look great because on a chart of data, their prices seem to be going well, but you really need to look up much or many more fundamentals for regions, or really even for any location of where you want to buy. And these are the reasons that we would both buy in regions. So number one, we're really looking for good, solid population growth. And ideally, I prefer to see families. We do see regions where the retirees are really driving the population expansion. So you have to be careful of that. Like places like Tasmania, where there was a lot of retirees moving there, that would be a reason for me not to buy unless there was a whole lot of families going there, and they're not. All right. The other indicator or reason to buy would be multiple major employment providers. So we want job diversity and industry. So not just only being the sugar capital, or definitely not mining towns. So we need a wide range of job diversity. We also want, or we're confident buying in a region when we know it's going to be a satellite of an expanding city. And so that would be, I guess, an example, though people there would hate it, the Sunshine Coast. So it's almost like a satellite of Brisbane. And the other driver is government investment, particularly in infrastructure. So hospitals, schools, roads, transport. And then the McDonald's versus Bunnings versus Starbucks index. So McDonald's, you'll see McDonald's set up where the developers are going in. They're usually the first ones in. I know I've met lots of buyers and sellers at McDonald's when we were doing like the bigger blocks for buying for builders. And then Bunnings, once you see the Bunnings go in, we know that the population or the new areas have really started to support the need for Bunnings. So they do their planning like a long way out. We always have to do our planning for a 10-year horizon, but I believe Bunnings is a little bit longer than that. And then, of course, once you see the Starbucks, it really means that an area has really got a really thriving population and really starting to feed on itself. So people are using each other's services and an area is really starting to stand on its own 2 feet. And of course, it comes down to the individual buyer's requirements as to what region is better for you. So are you looking for cash flow? Are you looking for capital growth? Or are you looking for an area where you can buy a really big block and wait for the urban sprawl to get to you? When you're buying in regions, beware of misleading data. So beware of growth coming off a really low base. I just realized a typo there. Where, like we saw in the data that we've just been through, where it looks like a percentage, there's been a growth rate over the last 3 months of 50%. Well, that's useless if it's, been off a population where the sale price is 300,000, and so the percentage looks really big because they've only had a small blip in price increase. And then the other thing to think about is unsustainable blips. So we talked about the pulse. So is there a really good solid upward trend? And of course, beware of false increases driven by hype. So that's where the data bros will go in and say, oh, this is the area. And they all go in and buy and take a flood of people in there. And then it looks like the data is going up, but then they just pull out. So you've really got to cut out the noise, look at the facts, and there's enough information available to be making these decisions. It's really easy to access the information, but just be wary of being misled by the wrong type of data.
Yes.
All right. So, Scott, do you want to take us through our regional market views?
Yes. So we're finally getting to the
end.
red meat of this podcast. Where are the markets we have been working in, markets we are looking at? And for those of you who have followed us for the last 2 years, there are not a lot of changes on this chart. Debra and I were looking at some of the old versions, and we have done a bit of an update just to kind of make this as current as possible. Solid performers, regional markets. We just continue to love the Sunshine and Gold Coast. The biggest issue there is one of price point. There just are not many people that can afford $1 million plus houses. I would be avoiding units in those markets, but we're looking at smaller terrace builds and townhouses, just trying to get in under the $1 million mark, getting footholds in what we believe will just continue to be good long-term growth markets. The Gold Coast as well just has very limited land supply. Now, it's always a possibility they're going to rezone some of those cane fields and there's going to be more housing coming, but so far it has been very slow, and that's going to continue to support prices up there. Just a new mention here of Tweed, Tweed Heads, which is just across the border from Coolangatta. So we crossed the New South Wales Queensland border. Gorgeous area up there, close to the water. There are some new master plans going in there. A lot of infrastructure being deployed. Look, we like it. It's one of price point again. It is expensive, but might be a way to play into the Gold Coast market. Also, for people that are over their Queensland land tax threshold. Little trick there is we'll go across the border, do something in New South Wales, and get $1 million limit if buying in your personal name. Maitland and Newcastle have been on there indefinitely. Central Coast, I would say as well. I mean, Debra, we both love them, as overflow markets out of Sydney. Growth just continues to, push out and radiate out from Sydney. There's some really nice spots up to the north of Newcastle we're looking at as well, with the upgrades to the motorway up there. Longer term, maybe a train line from Newcastle to Sydney. We will see, but that's not one we're betting a lot on. So that list has really not changed a lot. We've got markets we have been sort of avoiding. Smaller markets, even though they are showing growth, the Darwins and the Tasmanias of the world just have not been going into these places. And I'm not saying you won't see some growth there 1 or 2 years. It's definitely happening up in Darwin, but what's going to happen over the next 10? I just don't have a lot of clients that are looking to go into markets and buy, sell, and flip after 2 or 3 years. And I think the budget is also putting a limitation on people that have been using those strategies as well, because they're going to lose the 50% CGT discount. So if you do make that good short-term gain, look, you're paying a lot of taxes on it. Up in Queensland, really not going into the Townsvilles and the Mackays and the Gladstones. Again, there may be some growth up there. They're inland. God, Townsville is hot. I've been up there actually many times myself.
Literally, it's hot.
I think we just think there are better markets in Queensland, and we've got some listed over on the right. So up and comers. So just markets that maybe one of us is active in, if not both of us. We've got Rockhampton and Bundaberg in Queensland. Certainly should be, I think, on your list as regional plays. There's a new hospital going in at Bundaberg that its time frame is still a bit far out. Tend to not want to get in there too early with new builds, because we want to typically tie those more closely into jobs and employment growth around those hospitals. Rockhampton's got some nice opportunities, right, Debra?
Yep, moving right along.
And into New South Wales, we like the Port Stephens area, sort of closely watching that. I've talked about north of Newcastle. There are going to be opportunities in New South Wales. It just has not grown a lot. It's a bit of an expensive market, but I think for people doing their research, stick to up to and along the coast, as close to Newcastle, Sydney, and maybe to the south to Wollongong as you can get. And finally, over in Victoria, Geelong and Ballarat. We've sort of talked about Ballarat already a bit, and Geelong is just a nice, solid city with a lot going for it, some resemblance to the Sunshine Coast, and look, we just continue to like it.
Yep. Okay, sounds good. Okay, well, it's turned into an epic episode yet again. But as always, remember our key tips to watch out for misleading data. Use only trusted sources. Always conduct the financial pros and cons, particularly now that things have become a little bit more complex than ever before. Use criteria that's tailored to your requirements. So what's right for someone else might not be right for you. And there's something for everybody. If you would like some help, Scott is available. You can find him on Facebook on Scott the Property Coach. And also you can get help from the Property Frontline. If you are struggling and trying to figure out what you would like to buy, we have an offer at the moment called the Property Priority Search, which helps people really get focused and organized through their search, because one of the biggest killers for buyers and the cause of a lot of mistakes is exhaustion. So you just want to stay focused, and the Property Priority Search will show you how to do that in a really efficient way so that you only search for the property that's right for you. And that is it from us. Next time on Property Frontline Market Watch, we will be covering off the pros and cons of the best strategies to use in the current market, because strategies have changed since the 12th of May. All right, so we did cover a lot of information. Apologies for my semi-rant, but yeah, thank you very much for watching. If you would like to be notified of when the next episode is available. Make sure you subscribe. Our contact details will, of course, be in the description box below. But Scott and I are here to help if you need us. Until then, we would like to say goodbye.